March up your fan base. The Foremost Social Media Suitcase has a blogging section featuring tips, topics, and more. Foremost, for you. ForemostAgent.com.
Private company and nonprofit D&O coverage is often seen as very profitable for carriers. Some people even describe it as a pot of gold at the end of the rainbow. But Jeffrey Klenk, Senior Vice President for Travelers Bond and Financial Products, says that's just not true anymore. We spoke with him at the recent Professional Liability Underwriting Society meeting in New York, where he told us times are changing.
I think that's a great question. The perceived profitability of private D&O. Many companies out there, even today, would look at private D&O, and you still hear it talked about in the marketplace. This is great. There's a pot of gold at the end of this rainbow when it comes to private D&O, in comparison to maybe the older brother, the public D&O business. And it's really just not been the case for quite some time now. We've seen a variety of claims coming from ownership issues, as private companies are either dealing with private equity and trying to change the ownership structure, where maybe the private equity firm is trying to cash out. Disputes among the owners themselves, even if there's no private equity involved, ownership disputes and valuation. There's been a lot of claims by family members, because many privately owned companies have multi-generational private family interests that are involved in the ownership structure. And while the company may have been very important to the first generation or the second generation, the third generation is interested in how they'll pay for their BMW or their lifestyle. And so there's a whole, how will we get the equity back out? And so when I look at the discussion today of, is it newsworthy that private D&O has now got claims? It's actually been the case for many years now. And it's actually been not just little claims that usually get talked about. Maybe it's a few $100,000 for defense costs. I'm talking about seven-figure losses from a wide variety. In fact, in the panel that we just were having here at the Plus D&O conference, one of the comments I made was, unlike many other lines of insurance, like employment practices, you've pointed to certain state exposures or certain coverage issues like wage and hour. With private D&O, it's very, very difficult to pinpoint a particular exposure or issue, because really all of the claims are financially based, and they can come from many, many different plaintiffs. It's hard to say claims against private companies are coming in this particular place. Really, it's a wide array. If you are a privately held company, there are similar companies out there to what you do and how you do it that have had private D&O suits. It's not a question of, am I exposed? You are exposed. The question is, will you get hit? In fact, one of the statistics that just came out in the D&O panel that we did is that there's roughly more than 25% of private D&O companies say that they've been sued or had a D&O suit here in recent history. So 1 in 4, that's pretty strong odds when you're talking about a D&O lawsuit. It would be very difficult for me to comment on profitability. I work for a publicly traded company, and we have to be careful in the way that we report these things. I can tell you this, though, that the evolution of the D&O product for private companies and for nonprofits, we've seen over the last decade that as companies are more and more aware of what the coverage being provided is, and as the plaintiffs' lawyers have gotten more aware of the fact that the D&O policy could be used as proceeds in a case, the claim activity has certainly become more robust over the last decade, and the insurance policies are being used. Definitely seen a change in the marketplace of late. I've tended to use the words a fracturing in the market. I stay completely away from the words hardening or softening, and regardless, I don't think it would be appropriate in this space to say one or the other is really happening right now. I think that we're seeing more recognition on the part of some of the underwriting companies of these exposures that I'm talking about, whether they be geographic or industry-based or types of ownership, types of claims, and we're starting to see movement in different geographies in different places from different companies. So it's definitely, there is something going on in the marketplace, but I would defy putting a label on it at this point.